Good morning. Thank you for watching Taxes Made Easy here with Hubert Johnson with Guardian Tax Law. Just wanted to excited for another morning. Today we're going to focus on the next biggest state dealing with tax issues, and that's New York. So New York is unique in that it has a pretty well-defined offer and compromise program, and they do it regularly. There are plenty of other states. I'm just going to focus on the big two in California and New York because um, they have the most unique programs. They have defined forms, and it's the you know what you're dealing with when you're dealing with California, New York. Some other states, I'm in Arizona, and they're offer they don't have a defined program. So you submit an offer, you might qualify, and they might just reject it because the current administration doesn't want to accept offers. Go figure. That's how it is a lot of time in the States. Some tapes will accept them, some will. It depends on the flavor of the month. Some are more consistent, but it really varies state by state. So, if I do touch on another state, it would be Illinois, but again, that's still, I'm probably going to move on. I have really wanted to touch on the ERC and that situation, but we're over time, so we'll be back shortly. Welcome back, everybody. Sorry, I get going, and sometimes I just keep going when I get a little into a topic. But yeah, it's talking about. We're going to focus on New York today. It's between California and New York. They have the most defined programs and can lay it out, and most people owe those states. So the next third largest state would be Chicago. That's mainly because Texas, Florida, they don't have income taxes, which is nice, and again, they don't have to worry about dealing with the states. So before we dive into that, there's a lot of news out today, and there's a lot of news, some big news that nobody's talking about, and mainly because all the news has been focused on Super Tuesday. They had their primaries, and everybody wants to pay attention to the primaries and what's going on. No surprise there. Biden and Trump are going to go up against each other again. That shouldn't surprise anybody. So the news has been flooded about that. But what's going on with the budget? Since last Friday when it came out, hey, we kicked the can down the road for a week. The next budget deadline is in 2 days. And so they're going to shut down 20% of the government on March 8th if they can't come to a resolution. And then again on the 22nd, the rest of the government will shut down all non-essential, non-emergency personnel. And then again, there's vast numbers of people that are exempted from that anyway. So if you're reading a lot of scary news and fear-mongering about that, you'll just read up on it. Go to legitimate sources that will talk about what actually happens during a budget shutdown. It does affect some people. It affects my company in a huge way because when the IRS shuts down, we can't negotiate with the IRS. And right in the middle of tax season is not a good idea to shut down the IRS. They will continue processing a lot of returns, but it's yeah, the timing is not the best. But yeah, nobody's talking about, nobody's heard about it. And one of the big things that's happening tomorrow might give us a clue if they are willing to compromise on the budget or if it's still Democrats want to spend, and Republicans want to cut. And ironically, again, this is my little frustration with the Republicans. They want to cut when they're not in power. But when then they get in power, they want to spend on their priorities. So it's both parties, in my opinion, that are a huge reason for the financial disaster that we're in. Interestingly enough, Sri Lanka, a very tiny country out in the Indian Ocean, just announced that they are going to suspend all debt payments until 2028. They say, look, we're going to pay eventually, but we're bankrupt. We can't afford to make these payments. They're not the only country that has had to go through something like that. Spain, Greece. There are countries out there that have gotten themselves in so much debt they cannot afford to take care of their people and pay the debt. So again, there is a limit to how much debt we can take on and afford as a country. Currently, we're paying hundreds of billions of dollars. I believe that the national debt payments are out of control personally, and we're adding another $1 trillion to the debt due to increasing spending and interest every 100 days right now. So again, it is almost to runaway status. So that means we're adding more than our national budget almost every single year, or at least half of our national budget. It's mind-boggling numbers. But tomorrow, and this has been drowned out. The timing, I think, was done a little poorly. But the State of the Union is tomorrow. You might not want to watch it. I particularly, I'm not a fan of watching it. It doesn't matter who's in power. But it is important to note what kind of policy messages that they're sending, especially regarding the budget, because what happens with the federal government affects a lot of us. And in the end, affects all of us in some way or another. So it'll be interesting to see if they're going to try to rein in spending, if they're going to try to become a little more fiscally responsible, or is it if they're going to continue spend, expect there to be a nasty shutdown of the government starting on Friday. So again, it's not like this is a long ways away. One of the other issues here, and the IRS keeps putting out notices and there's articles saying that they're going to collect hundreds of billions of dollars from taxpayers, all thanks to that last bill that the IRS passed, the Interest Reduction Act, or Inflation Reduction Act, which is a misnomer because inflation has continued to climb. Putting more people to work in the IRS probably needs to happen. In my opinion, they need to put in customer service, which isn't happening. There's more people collecting, there's more people sending audits, there's more people going after people, but the number of people actually providing service and helping taxpayers out is lower than ever. Well, I shouldn't say it's lower than ever. Their service times are worse than ever. This is why I freely tell people, if you're going to try to call the IRS, trying to get something worked out with them, you have to call later in the week, ideally between 5 and 7 p.m. That's the best time to get through, hands down. If you're calling during the day, I can't most of the time you're going to get, we're busy, call back later. We're busy, call back later. How frustrating is that? Imagine if you were business and you had that message. Sorry, kind of torques my turkey that, again, people do hire me sometimes, not because they have a complicated case, but because they have no idea how to get through to the IRS and get someone to actually address simple issues and help them. And so that's, we have to spend attorney time because we know how to do that. And again, this is advice telling people when to call and how to do that. We freely give out this kind of information. So those are some of the big things to be aware of. Again, when the IRS says that they're going to collect hundreds of billions, they have no way of just targeting the rich. And that's been admitted as such by the IRS. So we're seeing more audits, more collections of everyday Americans. I've seen them go after increased collections on the poor as well as the wealthy. It's across the board, all Americans. So I'm going to call a big fat 4 Pinocchios on that claim from the government that they're just going to target the rich, because that's not what I'm seeing. It's not what's actually happening. And every now and then someone tells the truth about what's going on from the IRS newsroom, or someone gets caught on camera. There's a funny video where I talked about this where a reporter actually chases an IRS guy down that had admitted some things. He in a moment of clarity, shared some truth that he wasn't supposed to. And he was trying to get him on the record and get more information. This guy literally ran down the streets of New York to get away from this reporter and not answer his questions. So kind of funny, kind of sad. Um, when it comes to the government, I'm more of a libertarian. I'm a little jaded, and it should work for you. It should be working for the citizens. And don't get me wrong, there's plenty of good people at the IRS, but that's my soapbox for the day. So we're going to pivot now and focus on New York State. Now, again, because a lot of people are leaving or have left New York, there's a lot of issues that people are dealing with New York across the country. So I'm going to kind of talk about the differences between New York and California. New York does file substitute for returns or filing enforcements. They usually do it on information. So unlike California, they don't just pull numbers out of thin air and just assume that people had information. So New York is a little nicer in that respect. However, unlike California, New York frequently goes after driver's licenses. They do suspend, and California will suspend professional licenses as well as New York. They'll suspend professional licenses, and again, they're very aggressive when it comes to collecting. I would say less so than California, but more so than the IRS. Their tax debt sticks around for 20 years. California likes to play with those CSEDs and move them around, and it's even though something might be 20 years old, it's not uncommon for it to still have another 10 years in California. New York follows that a little more stricter. If your debt is 10, 20 years old, as long as it was filed timely, it looks to go around. So in general, I think New York plays fewer games than California. Less funny business, but they can be just as strict as far as going after people. And I've known someone that was homeless, trying to get a job, and couldn't get jobs. Anything that required him to drive or deliver or anything like that, because his driver's license was suspended and he couldn't get it released unless the debt was paid in full or settled with an offer in compromise. So one of the unique things about New York, California has a hardship program. And it's a pretty decent one as far as the states go. So you can get into a 12-month hardship at a time. New York doesn't have a hardship program. If you can't afford to pay anything to the state of New York, there's nothing they can do for you. They won't stop collections. They won't stop levies, liens, or forfeitures or suspension of licenses. You have just to sit there and take it. So we've got a commercial break coming up in about 30 seconds, but I have a client who we've been waiting for over a year for her to start making enough money where she can pay something to New York, because she's been on a hardship status, and we put her on a hardship status and actually did an offer with IRS, but we can't do that. Haven't been able to do that with New York until recently because she wasn't making enough money. So we'll continue this conversation right after the break, and thank you for watching live or on rebroadcast. Welcome back, everybody. Thank you for watching Taxes Made Easy. We're focusing today all on the state of New York. It's like every time I say that, I want to say New York City. Sorry, dating myself a little bit. New York is a great place to go check out and see. Again, it's still one of the massive engines of our economy. Not only Wall Street, but all kinds of stuff happens in New York City. And there's a lot of business that goes through New York City. So if you're not aware, if you live anywhere close to New York City, there's people, a lot of people commute into the New York City from Connecticut, from New Jersey, um, from upstate New York. So again, it's a whole region that's affected by New York City, even some people from Pennsylvania. So there's a lot of people in that region that have to deal with New York taxes. If you have a business dealing with New York, you might have taxes there as well. So I was sharing this story of this lady that we already did an offer with the IRS, but you can't do a zero offer with New York, and you can't do a $20 offer either. It doesn't matter if that's what your financials show. New York wants its pound of flesh. So I say that, that's an old friends from Shakespeare. They want something. They want a few thousand. So typically what I say is that want at least around 10% of the total balance. If you offer the original tax, they'll take it. So if you have a very low original tax balance, they'll take the original tax and wipe out the balance and call it a day. But typically, if you can't even pay that original balance, from what I've seen, it's about 10% that they will accept. You can go a little lower, a little higher. Usually I go a little lower, and then they counter offer, and we come to somewhere in the middle. And that's typically how it works. But you're not going to be able to, and maybe in rare cases, but every case I've seen, a $20 offer is not going to work. So you have to be showing some kind of income. You don't have to show some kind of income, but to do an installment agreement or to forward an offer, this one guy that's in a hardship status, already wiped out of balances with the IRS, still is waiting to get some kind of funds together to try to do an offer with New York. Now, right now, she started working. She started bringing some money. So I believe right now we've actually submitted her offer to New York, and we're waiting for that to get reviewed. But it is a process, and it's one of those things. I talk about IRS offers being Cinderella's slipper. New York offers are very similar to that. And ironically, sometimes you can qualify for a New York offer when you wouldn't with the IRS. And that's all due to some of the changes from the current administration in the last few years. We're hoping some of that changes. I think it's kind of silly that New York, and sometimes it's easier to qualify for a New York offer than an IRS offer. And again, I don't mean to go on about this administration, but it is this administration that's done it. The Obama administration didn't do it. The Trump administration didn't do that. Clinton before them, or Bush. This has been, this has been because of this current administration really tightening the rules and putting the screws to a lot of taxpayers. So, can you do an installment agreement? Of course you can. Every state's going to do installment agreements. Now, New York is pretty decent that if you show an ability to pay, so first of all, you can do a payment plan to pay the balance in full. They will give you normally up to 5 years, 60 months to make that payment. If you can't pay it in full within 60 months, you can do a partial pay installment agreement. They don't like it so much, but they'll do it. And so you have to complete the financial form and analysis. And one of the things I want to do today is kind of show you the forms, again, just like I did with California. And so we're going to do a share screen and just talk about some of these forms as I go through these options. So that's our good friend, Mr. Test. We have a lot of imagination here, sorry. And we're looking at some of the New York forms here. So this is the CRM we use, and there's some of the IRS, but when you go down to some of the state forms, we're going to look through the offer and compromise form, but really this is the New York Power of Attorney. This is the main form that you're going to be using. This is their financial form, their statement of financial condition. So I'm going to make that nice and big. And when I just download it in that way, yeah, that's a little bigger. Okay, so it's the DTF5. You'll use this for an installment agreement and for an offer and compromise. And again, they have a couple different forms here for an offer and compromise. Usually you'd be using the 4.1 to do an offer. So again, this is going to look very similar. Once you've done enough of these financial forms, I can pick up the financial statement required by most states if they have their own form. And, it's like second nature to me just because I've done so many different versions of the same form. So you fill out your information, name, date of birth, social, all that, home address, and all the people in your home, name of your representative, if you want them to be contacted. And you just have to put an as of date. This is when you're going through your information. Cash on hand, bank accounts. California, I'm sorry, New York's form is very thorough when it comes to assets. That's because a lot of people have a lot of connections to assets, coming in, immigrants, going through New York frequently, especially from Europe, and other areas, China, etc. A lot of people are emigrating to New York, do have funds, and maybe it's different than the people that are being flown up there from across the border. But historically, a lot of immigrants came to New York. They have family connections. They do have assets and funds or resources. There's plenty of people that don't. But again, it's definitely a melting pot, and so there's a lot of different assets that people have. So again, they have more space to put down more bank accounts, domestic or foreign, brokerage accounts, retirement accounts, cash value of life insurance policies, accounts receivable, inventory, notes receivable, artwork collections. Again, same general rules as the IRS to take an 80% valuation of most of these. They don't have exemption amounts though. Real estate, current fair market value, mortgage, and then any unpaid property taxes, because that is unfortunately a common issue in some of those areas where people owe New York. That could be a big issue in New Jersey. Any foreclosure proceedings, they want to know everything that's going on with your home. Vehicles, leased vehicles, and then interest in trust or estate, and then business interests. So you need to list the kinds of businesses you own or have rights to, any contingent claims or legal actions. Do you have any lawsuits pending? And that actually is important. I've done offers with lawsuits pending with New York. They just have to do some kind of collateral agreement or to see, hey, if you get a huge chunk of cash, some of that might have to go to New York. Increase in value, what's going on here? This is an interesting one, and I've talked about dissipated assets. This is what they're getting to. Have you given away anything and this amount is pretty low, it's a pretty low threshold, $500 or more. Did you give any assets away that were worth $500 or more during the time that you owed these taxes? If so, that can destroy an offer. It can even destroy an installment agreement. And that's with the IRS and the state. The IRS doesn't dig into it nearly as much for the IRS for setting up an installment agreement. And often you don't even have to fill out this form if you're just calling and doing it in financials over the phone. But again, if you're not going to pay it in full, they're going to want the form. They're going to want the substantiation to go with it. So any kind of transfer of real estate, judgments against you, bankruptcy, have you been convicted of a crime? And this happens. I've talked to quite a few people, and I've represented people. They committed crimes and then had to deal with. The best they have to deal with is just overwhelming when they get out. It's very burdensome. Again, we talk about recidivism, having people get back on their feet. It's tough. It's tough. And if we can help them normalize and get back into society, that should be the goal. So assets and liabilities, assets, liabilities. And so they have a very thorough section talking about really what kind of assets do you have, what kind of access do you have, to any kind of assets that might be able to use to pay down your debt. This last page, we're already on page 8 of 10. So I went through that pretty quickly. A lot of it's just going through and filling in the information and being thorough. Wages, again, they're going to go off of gross monthly income. So just like the IRS, gross income, and then all the deductions you can put in this section in the expenses. You need to, as long as there are deductions that will be allowed. So salary, wages, net business income, it just goes through. Essentially, if you have money coming to the home, it includes disability, includes VA, all of it. They want to know all sources of income coming into a home. Now here on monthly expenses, it really pays to, a lot of times it just makes sense to follow the IRS allowables where it makes sense. Food, clothing, miscellaneous, as long as you're not going too crazy, you can go above the allowable. And who are these paid? So if you're paying this to, if you're living with someone, again, they have a lot of family relations that will share residences due to the cost of living in New York, and how much you're paying for that. If you're not sure, just use the IRS allowable. It's pretty easy. Housing in New York, again, it depends. If someone has a setup where they're not paying that much, which does happen, but typically the average person is paying out the nose for housing and utilities, and the IRS allowables, even though they're pretty high, are still woefully low. So they're pretty high compared to most of the country, but again, it still lags well behind the real market costs here. So put in your actual amounts here for housing, utilities goes with that, vehicle. And so this, if you're using the IRS standard, it should be both of these categories together. But again, they're going to want to see those payments. So don't just go off the standard, go off your actual expenses here. Operating costs, again, if you don't have a breakdown, you can use the IRS standard or you estimate. Biggest issue I see where people are paying things in cash, buying gas in cash, run it through a credit card, have it go or a debit card, so you can see either on your credit card statement or your bank statement, and that's a great way of tracking that. Transportation costs. This is a very common expense in the New York area. So ferries, if you have to take the bus, the train, the subway, and again, if it's a normal thing, you just have to explain it. And again, they get it because the people looking at these they live in New York. They deal with the same issues. Again, so unlike the IRS, you can typically get vehicle operating costs and public transportation costs if you're living in the greater New York area. Health insurance premiums, out-of-pockets, a lot of these are fairly standard. We've talked about these in depth. Life insurance premiums, term life here, same as the IRS. Whole life insurance is just seen as a piggy bank that they can raid. Term life is seen as prudent financial planning, and you'll get full credit for the payments. Monthly taxes. So this is something, again, making sure you're paying sufficient taxes so you don't owe federal, state, and local taxes. So you might be paying New York City taxes as well. And you get full credit for those to make sure. So that's why it makes sure you're doing sufficient estimated tax payments so that you're not going to owe moving forward. It doesn't matter who you're dealing with, the states, the feds, you will get credit for not owing moving forward. And I did a podcast yesterday. One of the things I repeated multiple times was the importance of doing sufficient estimated tax payments. Now, this is an IRS issue, so I'm taking a little detour here. But they just increased in November 23 the penalty for having insufficient taxes or insufficient estimated tax deposits from 0.5% to 8%. So if you're self-employed, if you have any kind of business going on that you get business from and you tend to pay at the end of the year. You're going to have an additional 8% tacked onto that. Nobody paid attention to it before because it was only 0.5%. It was an annoyance. Most people don't care about it. Now, you have to pay that quarterly or you're going to get killed. Well, not killed, but I mean, you're going to get hit with this 8% penalty on top of everything else, which is brutal. The best way to do this is to get on top. Again, I was talking to it's a podcast for financial advisors, and he asked me, what's your advice here? Maintain a good relationship with a bookkeeper. You should know what's going on with your business, what's your profit, what's your return on investment. You should know what's making you money, what clients or what lead sources are profitable, which ones aren't. And having that kind of good information comes from doing regular bookkeeping and reviewing your profit and loss statement, reviewing your numbers regularly. Any large business, that's what they do. That's how they succeed. That's how they operate if they're managed in any kind of competent way. How many small business owners have no clue? They have no idea. So I said that to him, and the guy started laughing. He's like, yeah, it's like an instant argument if he asks his wife who's self-employed. And he was self-employed too, but if he asks his wife, what are you actually bringing in from your income, from your boss? And she doesn't know. He doesn't know. And I was like, do you talk to your bookkeeper or tax preparer quarterly? Do you talk to them, or do you just dump a bunch of documents and have them do that at the end of the year? And he's like, well, that's exactly what I do. And I was like, well, how do you know how you do it through the year? He's like, I don't know. With this change, you're going to want to be making estimated tax payments at least quarterly, and you get full credit with the state, you get full credit with the IRS, and it's going to make sure that you're not going to fall back into this. So same thing with with New York. If you continue to owe, they're not going to give you an arrangement, or whatever you set up will default, and you'll be in. And again, like I said, they're more aggressive than the IRS. They do issue warrants, tax warrants out for people that owe. And so it is a lot scarier dealing and owing the states rather than the IRS. Checking my time. The rest of this is pretty simple. Court ordered payments, child care, taxes, debt service payments for anything that's secured. So it says do not include unsecured debt, such as credit cards, personal loans. So what about if you have a loan on furniture? Yeah, if someone will come and take something from you if you don't pay it, that's a secured debt. Which means if you have a loan, you go and you purchase furniture, or anything that you purchase on credit, you'll get full credit for those payments. So we're coming up on another break in about 20 seconds here. We're just going to wrap it up with the business issues, and then talk more specifically about their offer and compromise, the form for their offer and compromise, and how to go through the process and have a successful offer with New York State. Again, we'll be right back in just under 4 minutes, and look forward to wrapping this up for you. Welcome back, everybody. Just want to wrap up where we were talking about the financial form. Really, we're looking at, you take your monthly business expenses, it's your household income minus your monthly expenses, to determine what you can afford to pay monthly towards any debt with the IRS or the state. So again, similar. This is what I enjoy about New York. If this proposal is from a business, enter the information below and attach the most recent year-to-date profit and loss. So, you can generally you just attach your profit and loss. Same thing with the IRS. And you don't have to take your profit and loss and try to shoehorn it into this form and outline that they have. You want a balance sheet, etc. So this is where it gets fun. If you do have a business, if you do have a profit and loss, if it's like right now, if you have your 23 return, they'll just take your 23 return if you can get it filed. If not, if we're past June, they're going to want a profit and loss for the first 6 months of the year. The later on you get in the year, they're going to want something that's fairly recent. If you're in October, you're definitely going to need at least the first 6 months. Later on in the year, they're going to want an updated profit and loss. So that's why maintaining good bookkeeping, stay on top of it, not only helps you be informed and look at and see what's going on with your business, but also helps you pull up that profit and loss when needed for IRS, for loans, or any kind of financial information that you need. So again, it's just good business practice. And again, you have to list the principal, owners, officers, whoever's connected to the business. This is one of the most important parts right here. What do you need to include with the financial statement? Now, unlike the IRS wants the last 3 bank statements. As long as your income is consistent, they'll run with it, and they will ask for other things. But here, you have to provide a lot more information for New York. So I'm going to go through this and be fairly detailed about this. Federal returns, last 3 years with all schedules. So you have to send the last 3 federal returns. Also include the Schedule C if you have a Schedule C, which is essentially your profit and loss. All Category 1 statements, or 1120S, or 1065 if those are filed as well. This is a key one. This trips up a lot of people. Complete credit reports. You only need one within 30 days of the submission, so it has to be recent. So don't pull this and wait for everything to get put together. You want to pull this right before you submit it, because it takes time for them to receive it, to process it. If you pull it too early and it sits there and it's older than 30 days, they will demand that you pull it again. And then bank statements for the preceding 12 months. So they're not joking about this. They are very serious. You need to provide these documents when you submit your offer. If you're going for an offer in compromise, if you did an IRS offer in compromise, they want to know what happened to it. It matters. If you have a successful offer with the IRS, it isn't controlling on New York, but it is very persuasive. So if you already did an offer with the IRS, you show that, hey, we didn't have any money, and then you go to New York, and this is true with other states as well. It is persuasive to show that, look, I had an offer in compromise with the IRS. Now, for the states that have a decent offer program, it is persuasive that you can go in and say, look, I want to do an offer here with the state as well. Doesn't mean it's going to get accepted. Most states do not accept offers very readily. New York is one of the best, or probably the best state when it comes to offering compromises, which is why I'm spending so much time on this. If you have indentures, this is kind of an off-the-wall thing preceding 10 years. If it applies, your lease agreement, they want your lease agreement and or mortgage. If you are, if you are a landlord, they want your leases as well, loan agreements, contracts for sale for anything over $500. I mean, they're not as strict on that, but if you are transferring assets, they want to know about it. They will pull up all of your vehicle registrations and go through that too. If you file for bankruptcy, they want to know about that. So here, this is a May, so you don't have to submit that. So any company prepared financial statements for the preceding 3 years, this is for a more complicated corporation, business, etc. And then you have to sign it. So again, want to go back. and just kind of highlight federal returns for the prior 3 years, credit report for the last 30 days, within the last 30 days, and then bank accounts for preceding 12 months. Those are you must attach. If it applies, you need to attach these other documents as well. So you're not usually just sending in the offer documents. You're sending in a stack of documents to New York, and they will request it. So want to quickly go over the DTF 4.1, which they don't have in here. So if you know which forms you're looking at for, you can just pull it up very quickly. So the form, the form that they have over here, the DTF 4, it's specifically for offers where you don't, the liability isn't fixed and final. You're just trying to say, hey, I want to do a settlement here, but the amount isn't finalized yet. This is rare. It's not done nearly as much as the 4.1. The 4.1 is what's really going to help. So let me go ahead and share this screen so we can all look at the same thing. Okay, so here we're looking at the New York. No, that's a. We want this one. It's a little tricky. I've got to be able to pick out the right website or web page that we're going to share. Here we go. Here's their offer and compromise form. And I'm going to go through this. It's easier than the IRS form. And this is for fixed and final liabilities. You have to have something assessed to do an offer in most cases. So this is going to be the typical form that you use. So basically you have a taxpayer, name, information, entity type, how much you're going to offer. It says must be more than 0. Usually it's more. So I mentioned a couple times already that I had a client that was, he was unemployed in New York. I don't know why that's, anyway. He's greater than, that's just annoying me. He was unemployed. We tried to do a low offer on him. I'm just saying, hey, he's been unemployed for years. He was, put in a hotel during COVID, but he was pretty much in the streets with a teenage son up until COVID. Then he got put in a hotel for a while, and now he's back on the streets trying to figure out what's going on. But he's finally getting a job because we finally settled this for him. We were able to do an offer and compromise for IRS very easily. It was a $20 offer, not a problem. Now we were trying to deal with the offer and compromise with the state of New York, and they weren't going to take $20. They were going to take $200. It was the balance was over, I think it was around 120,000. And so through a friend, he was going to give him the money. Again, it was a little complicated there, but his friend was partially or mostly responsible for this. So he was going to give him $10,000 to settle the balance with the state of New York. And that's what we did. We had to wait till everything was squared away, offered $10,000, wiped it out. I have another case where a gentleman, we just settled it. This one, I think, is close to $130,000, $140,000 in debt. And again, he's broke as a joke. He's working, but for his family, and he's not getting paid. He hasn't had an income for years, partially because of the New York taxes. But we recently got an offer accepted for him. Again, it was around, I think it was around $10,000, again, roughly 10% of the offer. And New York accepted it. Again, we went low. They came back and said, no, we want more. They wanted around 10%. And it's not an exact 10%. But again, we do get these through fairly regularly, but you have to have something to put down. They're not just going to take, a $20 offer or something like that. And that it doesn't say that on this form. So you don't have to submit, unlike the IRS, you don't have to start making payments or send 20% when you do the offer, but any payments sent in you won't be refunded. So again, liabilities attachments, you want to explain your situation, and that's the form. That's it. Pretty straightforward, very basic, and you have to send that with the DTF-5 with those other documents that we mentioned. And again, here's a lot of explanation. And this is kind of like the contract behind it, and then you have to sign and date it. And then explanations on how to fill out the form correctly. Don't forget this checklist. Is it correct? Do you have a representative? It's wise to include a completed New York power of attorney in this. Did you offer more than $0? So just go through this checklist. Right, here's those 3 things again. Last 3 years of federal income taxes, credit report less than 30 days old, and last 12 months of bank statements. So, and are you compliant with all of your New York State tax filing requirements? So you have to be filing compliant and payment compliant. So caught up and not only moving forward to do this. Now, one thing about New York, unlike the IRS, in the IRS, you can file your 2023 return and include in an offer. New York doesn't like you to do that. And most states don't like you to do that. So they want it to be at least 4 to 5 years old. There's no hard line on that. But if it's too recent and they haven't had any chance to collect on it, they don't like people that owe and then all of a sudden try to do an offer on it. So it has to age. It has to have sat around for a while, and then they'll do an offer on it. So when you submit your offer to New York, you get all the paperwork and you submit it, you have to follow up on it. Now, New York is pretty good. They have an offer unit with a dedicated line. They're not the hardest. They're easier to get a hold of than the IRS offer unit. Once you have someone, you just have to follow up with them and make sure someone's assigned. Once someone is assigned, you work with them and or their manager to work through the process. And in general, because we're prepared and we know what we're doing, we don't have a lot of problems when we submit an offer. And we've had some offer examiners with New York really work with us to see what we can do to get offers accepted. And that's because we're polite, we're professional, and usually there's some kind of story here. This gentleman that was unemployed for many years, he got hosed over by his business partner, which is why he ended up with the debt. That's a powerful story. And by getting them on your side, they really worked in our favor. So the other factor here is, it's got to be something that's believable. And if they don't trust it, if they think that you're blowing smoke at them, they're going to fight you on it. They're going to return it just because it doesn't smell right. But we've had a lot of success, and again, it's mainly because you've got to do it right. You've got to follow their program. And again, hands down, New York has the best offer program in the country as a result that they're willing to work with people. You can talk to someone directly. So if you have questions about New York, again, this is just 1 hour overview. Assuming that you've watched some of the other videos and stuff that I've already talked about. But if you have questions about doing a New York installment agreement or an offer, just give us a call, 520-485-7371. And I'm going to throw some numbers out here real quick. The main line for New York, well, we have a practitioner line we use, but the offer line is 518-591-5000. The collections line is 518-457-5434. Those are the 2 best numbers to call. If you do file an offer, again, first of all, talk to collections first, make sure everything's squared away before you submit that offer. And then once you do that, you're calling the collections line. Key takeaway, you have to check a different box, and it cannot be the same POA to talk to collections as the offer user. That's one funky thing about the IRS. So when you're figuring everything out, you get things straightened out, you have to have one power of attorney, and then you have to have a separate one for when you submit your offer. Go figure. It's just a quirk of New York. So we'll stay tuned tomorrow. We're going to really hammer in and talk about the ERC. There's been some additional updates, and we're going to have everything put together. Really want to hammer that home tomorrow. Have a great day, and thank you for watching.